It is September 2019 and Mumtaz Hassan Khan is a confident man. And why wouldn't he be? He's the chairman of Hascol Petroleum, a company that has been doing exceptionally well over the past decade.
Between 2010 and 2018,
Hascol saw its top line surge by an astounding 52.7% per annum, from rupees 7.9 billion to rupees 234 million. And while there are concerns over a looming crisis, all he has to do is keep a steady ship sailing smoothly. But fast forward to today, and nothing remains the same. Mumtaz is gone, upper management has become victim to a game of musical chairs, and in 2019, Hascol made a loss of rupees 26 billion for the year ending December 30th. In its recently released report for the third quarter of 2020, it has managed to make a loss of rupees 20.9 billion. The company is also crippled by severe debt, with the 14 banks it owes money to forming a consortium to get back that rupees 58 billion. On top of the rubble is Alan Duncan, a former UK Minister of State and executive brought in to try to stop this rot. What has happened to Hascol, and what are they trying to hide? Babar Nizami and Maryam Ali investigate. Things at Hascol weren't always like this. In fact, it started off quite strong as a promising new oil company in the Pakistani market. In 2009, under Salim Butt, they started getting regular loans from Summit Bank after a difficult few years where they were not yet trusted by the banks. Since then, the company saw revenue increase from rupees 10.3 billion in 2009 to rupees 274 billion in 2018. But what went wrong in 2019? Revenue dipped from rupees 274 billion in 2018 to rupees 180 billion in 2019. And net income went from a loss of 123 million rupees in 2018 to a loss of 26 billion rupees in 2019. Hascol was a victim of market dynamics in many ways, because the government regulates prices of oil products sold in the country and does not adjust prices fast enough to keep pace with the extent to which prices change in international markets. As a result, companies like Hascol are sometimes stuck with inventory that they bought in at much higher prices and are forced by the government to sell at much lower prices. This was followed by 2020, which saw the coronavirus pandemic cause further damage to 2019, when the company had already been making huge losses. For the 9-month period and until September, the company's revenue stood at rupees 130 billion. For the same period in 2020, the figure was 99 billion rupees. But was that all that caused the abysmal loss of Hascol? Or was there more to it than bad timing and a difficult 2020? For instance, in October 2020, OGRA suspended the marketing and distributions license in KPK for operating illegal and unauthorized storage and selling of petroleum products, petrol and diesel at Amangarh Depot, despite OGRA's clear directives for the stoppage of operation at Amangarh Depot. Then there are accusations of dumping, which essentially means they are selling their oil illegally at cheaper rates to pumps they are not supposed to be selling to. How do they manage to do this? Smuggling. So, if there's a crackdown on smuggling, the oil company involved in the practice begins to suffer. But perhaps most importantly, the company took a whopping 7.6 billion rupees impairment against receivables and revealed hardly any details on who the counterparties were. The company claims that they lost it to a middleman company called SR Fuel Experts. While Profit could not find any information on SR Fuel Experts, there is a company called Fuel Experts, which is formed in 2011, that specializes in the distribution and transportation of oil and gas products. The only problem is that the management of Fuel Experts claims that they owe nothing to Hascol and that their bills are clear. If it is not Fuel Experts that owe 8 billion rupees to Hascol, then where did the money get lost? And why would a company like Hascol allow one middleman with such lenient credit terms? Unless, of course, if the middleman is only a front for Hascol's own management at the time. Indeed, a related party to the controversy heavily insinuated that it is exactly the case and that Hascol used to maintain multiple sets of books to do just that. With all this going on, everything else has also been falling apart for Hascol. For starters, the banks have been passive-aggressive with them for a long time and now are coming after them with a vengeance. Add to that the shadiness of their books, and it also makes sense that Ernst & Young resigned as co-auditors last year. It is always a case of concern when an auditor resigns, particularly when it is one of the big four firms. With the company changing 2 CEOs since 2019, getting a new chairman, and currently not having a CFO after the second one in the year resigned, things are not looking too good. So with concerns about dumping, debt, and interesting new chairman, what will Hascol do now? The company said it would try significant reduction of operating costs, recapturing and growing sales volume and market share, disposal of non-core assets, shoring up working, and raising of additional equity to reduce leverage and address negative book equity. All well and good. But what about the people who lost their money in the meantime? And considering their track record, their insistence on keeping things secretive, can anything in the company says now be trusted? One sure hopes so, for the sake of their lenders and investors at least.